what the market is round up to be like today. Let's keep the discussion going ahead with Nilesh Jain, Head of Derivatives and Technical Research at Centrum Broking. Nilesh, hi. Thanks so much for joining us on the show and speaking to us on ET Now. Give us your sense on where you are seeing the markets headed, because fourth consecutive day of losses, you have the benchmarks that are falling, broader markets are falling. Amid all of this, surprisingly, the VIX is rather stable. So what are you making of the market sentiment right now? Are the bulls in charge? Are the bears taking over? What can we make of this? Because on one hand, indices are falling, on the other, VIX looks steady. So what sense can we make from this move?
Very good afternoon too. Absolutely. So today was a day where we have seen a kind of a selling. Yesterday again we saw across the board selling. Today Nifty has breached below its crucial support level, which was placed at 24,300. That's 21-day moving average that has been taken off decisively on the closing basis. So that is not a good sign. Overall, the market breadth is slightly on a negative side. It looks like Nifty is heading towards its 200-day moving average that is placed at 23,800. So before that, we have a psychological support as well, which is placed at 24,000. If you look at the derivative data of the weekly FN expiry expiring tomorrow, the data shows that 24,000 is the strike on the put side where a lot of put writing can be seen. At the same time, 24,500 where the call writers are very much active. So that's the 500-point trading range, at least from this week's point of view. And I won't be surprised if we see any strong rebound from here towards 24,300 to 24,400. As you have rightly pointed out, VIX has cooled off today after 2 days of spurt. So it is trading in the comfort zone at 14. I think if at all we see any further fall in the IVs, that will provide more comfort to the bulls. But as of now, the index, since on the closing basis, is not a good close for the Nifty and Bank Nifty. Bank Nifty, which is leading the entire fall, the structure of the Bank Nifty is not looking that promising. It has a very good support at 51,700. So from current level, there is still room for another 400, 500 point on the lower side. So better to, stay away from taking any contra bet on the index as of now. Focus should be on stocks and sector specific move.
So you're saying banks are more vulnerable. We could see more downside, more pressure coming in on banks, and globally also we've seen Dow has been on a longest losing streak since 1978. Globally, the banks are underperforming, banks and financials, and so is what looking in India also. So which are the spaces where you feel the margin of safety? Are the defensives going to tread the volatility further? So the margin of safety lies with IT, pharma, FMCG.
Absolutely, Priyanka. You have rightly pointed out defensive once again back into action. Nifty Pharma Index. If you just pull up this particular index on the daily time frame chart, we have seen a strong rebound in the Nifty Pharma Index. Looking at the today's reversal candle, it looks like it is heading towards 22,500 to 22,700. That's the Nifty Pharma Index. It is on the verge of a breakout from a falling trend line. So within this space, counters like Dr. Reddy, Divi's Lab, Lupin, Sun Pharma, these are the few names that we are tracking on. Apart from that, Nifty IT index, which was trading at all-time high, although some profit taking was seen in the previous two trading session. So Nifty IT is something that is looking attractive given the kind of depreciation in the rupee that we saw. So IT index itself, within that space, specifically large cap stocks like TCS, Infosys, and SCL Tech. So these are the few names that are looking positive on the chart. So these are the sectors that are looking positive. We have seen more pain in NBFC space, financial space as a whole. So that's the sector where a lot of short buildup can be seen. So as of now, it's an avoid taking any contra bet on NBFCs, but focus should be on defensive.
Nilesh, thanks for all of those views coming in, but I believe you also have some specific stock-specific ideas for us headed into tomorrow's trade. Tell us what they are.
Right. So I have three buy recommendation. First of all, within consumption space, specifically liquor space, where we have seen a good spurt today. So Radico, where we have seen a strong move, the stock has hit a new record high. Radico, it looks like it is heading towards 2,600 and 2,630. So these are the target on the upside for Radico. Stop loss can be placed below 2,510. So advisable to buy on some dip. If at all we see some profit taking, that can be a good entry point. Apart from that, EID Perry, another good stock, good move today we have seen in this particular counter. It has hit a new record high as well. So these are the stocks which are constantly showing strength in the weak market. So advisable to buy on dip. EID Perry is looking strong for 1020 kind of target on the upside. 958 should be the stop loss for the long. Apart from that, Star Health is something that is looking attractive given the kind of formation that we can see. A double bottom can be seen on the daily time frame chart. A breakout above 495 will provide a confirmation of this particular pattern breakout. And then on the upside, 510 to 520 could be the potential target. And the stop loss can be placed somewhere around 476.
All right, so subsectors of consumption and an additional stock, Star Health, what will you recommend at these, particularly with this market setup? Thanks very much, Nilesh, with your view as well as your recommendations on the markets.
If you like this video, then like, share and subscribe to ET Now.